Greetings, everyone. Welcome to the Life and Transitions Experts YouTube channel, Facebook group. I'm your host, Courtney Rollins, here with another topic and conversation that I hope is helpful to you. I am the probate and property specialist in North Carolina, which means I help a lot of families who are dealing with estate issues or probate issues, or just some folks who are looking for quick and easy solutions for their house. Now, sometimes the solutions aren't quick and easy, and I can help you and support you with that. But quite often, my job is to help you find some of those things that can help you get the probate process taken care of easier or selling the house easier. I am a cash buyer, but I have many tools in my tool belt, and that's what we're going to talk about today. We're going to discuss a long-standing, as old as time strategy for selling property that surprisingly not as many folks know about, and that is called seller financing, owner financing, selling on terms. What is it? And what are seven reasons that you may want to consider doing that? So let's jump right in. All right. Hopefully my screen is being shared. All right, I think it is. Here we go. Let's rock and roll. All right, so sell your house for more money by seller financing. Yes, that is one of the potential benefits of it. So let's dig in. Oh, I must say, remember, I'm not an attorney or giving financial or legal advice. I'm sharing my experience, and hopefully it is helpful to you all. So, number one, let's just discuss what seller financing is. If this screen will move. Okay, so seller financing, as opposed to more traditional financing, which usually use a bank or some type of lender. Let's go to traditional financing first. You have a seller and a buyer. A buyer wants to buy your home. Well, they're usually not going to pay, even when they say they pay all cash, they usually have some type of investors or cash investors, or in the traditional sense, the bank that will lend them the money. So, although the buyer is quite often responsible for the down payment and closing costs, the remaining amount will often be lent to them from a financial institution, as I said, like a bank. So, and the closing attorney will take care of all this, but you will the buyer will, and the seller sign a contract with the terms agreed upon of how much the price is and when it's going to close, all that good stuff. And then the buyer takes this contract to a bank and says, "Hey, I have this great property here. Would love for you to lend me money on it." The bank will say, "Okay, you're responsible for this, and here's your money." All right. So the buyer will submit their down payment. The bank will submit the funds for purchase to the seller and create a note or mortgage or deed of trust or whatever the term is in your jurisdiction for you. Now the bank owns this note and mortgage, and they're allowing you to have ownership of the property. Well, technically, they own it until it's paid off, but you can live in it and operate it as yours. You're responsible for the taxes and all that good stuff. And so, this is awesome when folks don't have the large lump of sum to pay, but they have good credit or they have strong enough credit and a strong enough property where the bank has said, "Okay, we'll lend you on this hard asset." Now let's take a step to seller financing. Seller financing, it essentially eliminates the bank. And the banks are great spaces. However, they could be very tedious, very long. The underwriting can take a long time. You sometimes the right hand doesn't seem to know what the left hand's doing. They have to vet the the deal that's taking place. However, a lot of that can get bogged down in bureaucracy and I don't know if bureaucracy is the right term, but like the processes that don't necessarily appeal to sellers and buyers. And so when you eliminate the bank, you cut out a tremendous amount of time. You have a potential to cut out a tremendous amount of time. There quite often still is a down payment. Sometimes there's not a down payment. It really depends on the terms, and that's what we're going to talk about. But essentially, the seller and a buyer agree on terms. We agree this is how much you're going to pay for it. We agree this is how often you're going to pay. We agree this is how long the loan is out, and we agree that this is the terms, right? You would still get an attorney or to write up the mortgage, and now the seller, as opposed to the bank being the bank, the seller is the bank. And I'll tell you three benefits that I know of if you're thinking about being a real estate investor and you're considering seller financing or renting out properties. Consider possibly being the bank as opposed to being the property owner. You don't have to deal with three T's: termites, toilets, and tenants if you are an investor. So you may want to consider this as an investing strategy. But if we're looking from the seller perspective, here are some of the benefits for a seller. One, it's a faster sales process. Again, you don't have to deal with all the underwriting. So much quicker. You still want to make sure you're vetted with trusted attorneys so that everyone is transparent and everyone's on the up and up and it follows suit with the laws of the land and everyone's protected. Number two, you'll attract more buyers quite often. There are some folks who, for whatever reason, cannot afford or not afford, but apply or get approved for traditional lending. Maybe there's some high income producing entrepreneurs that can't show that they have a W-2 for the past several years, or perhaps they've had issues with their credit in the past and they're really trying to get on board. You'll have a wider range of folks who are able to apply or to make an offer. Again, you still want to vet them. There are definitely ways you can make sure you check for income. You can make sure you check for background. Of course, there's things that are going to protect yourself legally with your attorney when you all sign and protect them as well. They want to make sure that they're protected as well. So there's some really simple steps you can do to do that. But it's awesome that you have more eyes on it. With more eyes on it, there's potential for a higher selling price. You're selling a property at a premium. They're walking in under terms that make it easier for them to step in, which means the end price can actually be a lot larger. You're maybe 5, 10% more than what the market value of the house is, of the property is. So that's a great thing. So although you may get a smaller down payment, you know that I have this price locked in and it doesn't matter how the market's going up or down. It's an awesome tool for that. Steady stream of income. We talk about passive income every month or however you agree. If it's 6 months, 3 months, 1 month, 1 week, whatever the terms are, you get to you know that you're having a steady flow of income. So you created passive income for yourself. And unlike rentals where you're dealing with termites, toilets, and tenants, you won't be dealing with any of those things as the person seller financing. And interest income. Now, some folks don't come up with, some people don't come with interest, some folks do. Alexa, stop. I have my timer there. But quite often you can negotiate interest, and that's not coming off the principal. That's based on the interest. The privilege of borrowing money, you can discuss the interest terms. And then there's tax benefits. Of course, consult your attorneys. But when you take money at a lump sum, Uncle Sam said, "Hey, I'm your silent partner in that. Come give me some of that." When you take it over an extended period of time, 12 months and longer, then it becomes a different category of income and it's taxed at a very lower rate at the time of this recording. So that is a great benefit, saves more money by not giving more money to Uncle Sam, and you're still providing great resources to society. So that's awesome. And again, flexible, controllable terms. Almost everything I discuss can be flexible. How long, the cost, is there interest, is there down payment, when are they being paid? All this can be determined by the buyer and seller as long as everyone agrees, as long as it's legal, as long as it's recorded, and you'll be in great shape. If you want to discuss any of this, please reach out to me. I take a heart, head, hands-on approach to helping people through the process. Even if you don't work with me, I definitely will share any experience that I have that may help you make the best, most informed decision that you can. That's right. This is Courtney Rollins with the Life and Transitions Experts channel. That's LITE. Let your light shine. Cheers.